While higher rates continue to hinder the mortgage demand more broadly, they actually might provide a sort of silver lining to our next guest. Shares of mortgage lender Mr. Cooper Group are up a whopping 41% this year. So could this be a hedge against rising rates? Joining us now is Jay Bray, Chairman and CEO of the Mr. Cooper Group. Jay, welcome. Good to have you with us. You sort of have the mortgage market straddled. You're a large mortgage servicer, but you are also an originator. So talk to me about those two sort of rivers of business. Which one is doing best right now and why?
Thanks, Tyler. It's nice to be here. The servicing business is crushing it right now. We have a balanced business model, as you mentioned, both in the origination side as well as the servicing side. And, homeowners, Diana said it well, existing homeowners are staying in their home. And that's great for the servicing business. So it's doing incredibly well.
And the origination side of the business less well, I would take.
Absolutely. That business has slowed down dramatically. It's really all due to rates. And, we don't really see that returning for, probably until sometime next year. I don't think rates will go down. So, we are investing in our origination platform. We want to be ready for the next cycle. But right now, it's all about servicing.
And Jay, you mentioned a couple of months ago that with all the bank consolidation, with them trying to get out of the mortgage market, that there would be opportunities for companies like yours as you take on some of these assets. How has that played out?
It's played out just like I said. It's been fantastic. I mean, if you look at the marketplace today, there's a lot of servicing that's being sold. And we've been a big beneficiary of that. We would have acquired this year already over $100 billion in servicing. And so we think that trend is going to continue and don't see it slowing down anytime soon.
And obviously, distress in the mortgage market is next to nothing right now. But as we see the home builders with high prices buying down some of the mortgage rates and buyers really struggling to get into new construction, maybe paying more than they might have wanted to, do you anticipate over the next coming years that you might see some distress in the market because people are stretching so much?
I think you could see some distress. Like to your point, we're not really seeing anything right now that's concerning. Home buyers have a lot of, or homeowners have a ton of equity. But over time, you will see some stress. But I think we're probably a year to 18 months away from that.
Well, I want to talk about yet another thread in your business, and that is the home auction business, which you're in, right?
That's right.
Home auctions. And I was speaking to a dear friend of mine who is from Australia, and he says that almost every home in Australia is sold at an auction where people go and actually bid. Do you talk to me about that line of business for you, and do you see that as something that could be a growth avenue for your company? Will people become more accustomed to going and actually bidding in an active way at auction on a home?
Tyler, I do think it's going to come. I think there will be a marketplace where you will actually see kind of retail homes being sold. Today, our auction is predominantly focused on the government programs. And so we sell through our marketplace today. It's called Zone. But yeah, I do think you're going to see, a marketplace where people can actually go and list their home, and there will be a competitive bidding process, just like you described in Australia.
And just looking into your crystal ball, I keep hearing everyone say, well, mortgage rates are high right now, but we expect them to pull back in the fall. And they've literally been saying that for months now, and we just continue to see them push higher. You're in the business. In your crystal ball, where do you see rates going in the fall?
I do not see them going down. I mean, the way I think about it personally is I don't think you'll see rates come down until probably second quarter of next year. I think rates are going to stay higher for longer. And, if you just look at the overall Fed, what they're doing, you look at unemployment, you look at, it's just the strength of the economy. I think rates are going to stay higher for longer.
If rates go up, I mean, typically speaking, if rates go up and stay up, you would think that would retard price growth. But it doesn't seem really to have done that in a big way.
No, you're talking about home prices?
Home prices, yes.
Yeah, no, because of the supply. Like you talked about earlier, there's just there's millions of homeowners that have the 3% interest rates, right? And so there's no incentive for them to sell. If they did sell, where would they go? So I just think because of the supply imbalance, you're not going to see, prices come down in a significant way.
All right, Jay, thank you very much. Diana, thanks for sticking around. Appreciate it, both of you.
Thank you.
Thank you so much.